Welcome to Markets Tomorrow.
Hi everyone, let's flag off who our experts are joining in over the next 30 minutes to guide us through. And we've got Sandeep Bhatia, ED and Head Equity Sales, Kotak Institutional Equities joining in. Tahir Bhatia, Senior Vice President and Co-Head Equities at Motilal Oswal Management. And we also have Mitesh Thakkar, Technical Analyst, miteshthakkar.com.
A bit of a surprise really the way Jindal Steel traded today. That was a top gainer on the Nifty on a day when the Nifty did fairly well for itself too. Well, while the day probably was dominated by what happened to certain mid-caps like BEL, let me start off with what happened to the large caps. And the way CNX IT traded, some of the private banks traded was fairly decent. So look at CNX IT and then look at stocks like HCL Tech. Look at Tech Mahindra, look at TCS Wipro. So these are a few names that did very well. Let's have these individual names going. So the CNX IT names, HCL Tech, Tech Mahindra, Wipro, etc. Then you had ONGC in particular, which deserves a special mention. Should the FinMin clear what the subsidy sharing burden cap news is, which is capping it down to 50%, I think it's a huge positive for ONGC and the stock could well see some more upsides going ahead. So watch out for ONGC as well. 428 and counting in today's session, but could be more upsides if indeed there is some clarity that comes in on the FinMin clearance. That aside, ahead of expiry, you had stocks like Asian Paints, which look poised for more for tomorrow's session as well. At least the F&O traders seem to be suggesting that. I think private banks, as I said, piled on their gains. The likes of IndusInd Bank, ICICI Bank, etc. did fairly well. And it negated the losses that came into stocks like DLF, wherein the Supreme Court upheld the verdict of CCI. Sure enough, DLF has the option to appeal against it. But if indeed they have to eventually pay 630 crores, that is equal to the FY14 PAT of 646 crores. So it's a big dampener for DLF. Not the best of rulings for it, and that one is down 4.5%. And then some minor losses to BHEL and Sterlite, but nothing to write home about. I think DLF was the only big loser, and a lot of gains for private banks and CNX IT. But Avan, mid caps, I mean, took my breath away even when I was, talking about closing trades, and the kind of gains that stocks like, say, a BEL, etc., have shown. Spectacular.
It was indeed, and you saw that bump up, and this is happening day after day where we're seeing some individual stocks really hold out smartly and capture a lot of attention in the broader markets. And ditto was the case with the way the CNX mid cap and small cap indices even panned out today. Pretty much record highs. Those are some stellar movers today. You had a Havells, a Torrent Power that really stood out. Take a look at even how the broader markets ended in trades today. They managed to outperform the frontline indices, so it was a positive market breadth ending close to the day's high. Yes, there were some counters that held out, but then on the downside too, you had names like a UCO Bank, which really sucked in trade, and that too after the government ordered that forensic audit into some of the non-performing accounts of the lender. And that means that it's the fourth public sector bank which is now coming under the Finance Ministry's scrutiny. So corporate governance at its best indeed, and some of the individual counters really taking a beating. And yeah, you flagged it off correctly. There were the defense companies which saw some brisk buying activity today, and they topped the list given that the government has notified the higher FDI in the sector, raising the limit now to 49% from the earlier 26%. Take a look at a BEL alone. Almost a 20% rise is what you saw. BEML 5% higher. GVK Power, a good spike coming in after the airport arm inks its first deal for commercial property development. So it's awarded the land parcel to Oasis Realty. That's for nearly 600 crore rupees, so 5% higher. Shriram EPC, wonderful move coming in there. The debt recast got the CDR cell approval, on account of which it was very buoyant. And Venus Remedy is a big shot in the arm as it tied up with Teva for anti-cancer drug, and it will be entering the Canadian market. I flagged out some of the mid-cap movers, but take a look at Alok Industries, second day running, very strong gains. And you had a Gen Irrigation too, which held out, along with Havells, which continued to surprise. So by and large, the market momentum, at least for the day, continued to remain fairly brisk. Let's get in our experts then, find out what they make of this. And Tahir, what exactly is it that, you would be looking at in terms of the next crucial trigger? Do you think that perhaps it's going to come from overseas, or that we're going to get, some policy developments or some news from the government that's really going to drive momentum, or perhaps on the macros?
My sense is that probably one may probably have, some of the domestic triggers probably shape up for us over the next couple of months, especially in the form of reform, because there are a couple of things which are lined up. Essentially the oil and gas reform is something which is clearly on the table, and it's probably due over the next 1 month or so. So I think the whole of September will probably be a lot of action around that space. Both the gas pricing issue as well as deregulation on diesel. If those are things which we can get out of the way, then that's going to be fairly well received by the market, because we've seen a bit of lull as far as reforms go. So I think that should be something which is very welcome. I'm not too sure what we can look forward to on the global side, but any kind of irritants which probably get out of the way in terms of geopoliticals, I think that should also be supportive of the market. But I would think that we will probably see more on the domestic side in terms of policy action.
Mitesh, good moves today. You think we have it in us to move up further from these levels, maybe tomorrow on expiry day and even for the new series?
Neeraj, I think the overall setup is surely positive, but I think, clearly there is some kind of lack of momentum. It is a very inconsistent breakout in the sense that all the sectors are not really participating at one go. I just heard, you're talking about and having a discussion on the realty sector. I think that's one clearly missing, which is a high beta pack. Amongst the Nifty heavyweights, I think, stocks like Reliance, ONGC haven't done much. ITC has been sideways. You can talk about other names which are not really participating, especially in some of the private sector banks. But the setup and the bias is positive. The indicator direction, the technical chart structure clearly points towards more upsides. What is, I think, required is one strong trend day. I think once that happens, then you might see some kind of momentum come back into the market. So I would wait for the Nifty to start, getting past the psychological mark of 8,000. I think if that can be captured, we can see a couple of strong price action day for the Nifty and some of the stocks. I think then we are in for a faster run on the upside.
Sandeep, let's get in your views, where practically, every day seem to be hitting those all-time record highs. Does it seem like it's going to be smooth sailing from here onwards, or do you think that the market may get into a bit of a consolidation phase, or that matter, even a corrective phase?
When markets are at an all-time high, it is clearly the weight of average and history that some correction may come through. The real question is that whether you use the correction to buy into the market or use the correction of these highs to sell into this market. So on the balance, right now, with the headwinds which are happening in the US and Europe, and the tailwinds that we are seeing in India, I think on the balance, any market correction should be used to add. Really the question is, we can't buy the market unless you buy a market ETF. If you can't buy the market and if you want to buy specific stock and sectors, I think the focus should be on sectors that will benefit from falling interest rates next year. We don't expect interest rates to come off very soon, but from March next 2015, interest rates should be on the way down. And I think the focus should be on sectors which will benefit if there is a cyclical uptrend. Till now, we have not seen a cyclical uptrend. GDP growth numbers would be in the region of 5.5%. But if we see GDP growth pick up to 6.5%, 7.5% in the next 18 months, we have to look at sectors which benefit from that. And sectors which benefit from that are clearly autos, in our view, which benefit both from falling interest rates and higher GDP growth. And more importantly, also look at sectors which don't have regulatory issues which can potentially hit them. We saw what happened with the metal sector. I think the next 6 months, all this will still be behind us. But clearly look out for any regulatory issues in sectors that you're investing in.
Tahir, to my mind, the sector in news, ONGC, I'm just terming it as a sector, but just the fact that if indeed subsidy sharing for these companies, ONGC, All India, gets restricted or capped at 50% with the remaining 50% being borne by the government, how big a positive could it be ahead of the much hyped FPO?
It could be. I mean, it's a pretty significant number for ONGC, given that their share of subsidies would have probably been at almost levels of around 65,000 crores in the last fiscal year, and probably can potentially decline to less than 40,000 crores in the year, let's say over the next 12 rolling months. So that's a fairly significant number. And even if let's say ONGC share out of the savings of around 25,000 crores happens to be 20, the rest probably goes to Oil India. That's also a fairly significant number for them to be able to undertake some much needed capex on the exploration side. So it's a fairly large number, and even in a worst case situation where, let's say, we were in fact evaluating whether there could be a worst case situation where ONGC is probably asked to bear an even larger proportion of the overall subsidy burden. Even in that situation, the overall reduction in the subsidy pool will actually benefit, will mean a lot of benefit to ONGC. So I think net ONGC does stands to benefit. There are a lot of low-hanging fruits because most of its product slate, either be it on the fuel side or on the gas side, is not market linked, and if they become beneficiaries of deregulated prices on both sides, gas as well as other fuels, I think there can be a significant upside to its earnings, and which can come about very easily without much of capital investment or much of delay. So that's something which clearly is something which can drive ONGC significantly higher.
Sandeep, let's come to you, on the overall auto space. Do you think that the kind of move that we see is going to be largely spread across the ones that have global exposures, the likes of Tata Motors, as well as domestic players like M&M, Eicher, Ashok Leyland, for that matter, even a Maruti?
As far as autos are concerned, we like Tata Motors and Maruti. Tata Motors we have liked for a very long time. The real driver for any auto business is its product pipeline. I think in India we had some difficulties understanding what Tata Motors can do, because the kind of products which Jaguar Land Rover sells is not a product which most Indians would have used or experienced. But what was happening with Jaguar and Land Rover is that it was a product line which was not fully fledged. It didn't have products at the bottom end, it didn't have products in the mid end, or it doesn't have engines. What was happening in the last 2 years and what will happen with now Land Rover, which is an SUV brand, is that you will get a refurbishment of products across the board with new engine options, new powertrains, and new technology in construction of the built bodies, which is entirely driven by aluminium, which saves weight and increases fuel efficiency. That is Land Rover Jaguar story. On top of that, we have the India business. The India business has been a dog. In fact, most investors would assign a negative value to the entire passenger car and the truck business of Tata Motors. We think that's going to change in the next 12 to 18 months, which is why it's a buy. The other story is Maruti. Maruti is a 1.2 to 1.3 million unit business. The management wants to take it to a 3 million plus business over the next decade. I think it will be even faster if GDP growth in India picks up. Clearly, there we have a flashing out of products. The Maruti brand is very well entrenched in the country, but its product line is 12 to 15 models. What we will see coming through is new products and a fleshing out of the product line to maybe around 25 new products, which are separate products catering to market segments which are not currently catered to by Maruti. So that is what something will drive Maruti, in addition to the uptrend which we will see both in GDP and falling interest rates.
BEL is something that we'll discuss it later on in the show, because it will form a part of the picks as well for all our experts. So I think I'll leave that for later. Another very active pack today was what was happening to some of the consumer durable companies. Actually, the last 2 days, if you look at what Havells has done, if you look at what Voltas has done, these stocks have had a spectacular run the last 2 or 3 sessions. Tahir, large, mid, small, almost everything is doing very, very well. From a Hitachi Home to a Symphony to a Voltas to slightly obscure names like Lloyd Electric, almost everything is doing exceptionally well. The results are also coming out fairly good on a quarterly basis. Do you like this space? It's not a very wide space, but do you like select pockets here?
Yeah, and I think we love this space. I think this is one space which I mentioned earlier also is something which probably will be a big gainer. Also the good part is that we have a lot of options. I mean, it's a good cluster, but it's spread across various kinds of product lines. You could probably include even autos, some of the auto product lines also within this category. And so consumer discretionary as a play remains a pretty good choice. I would think we are significantly overweight in various forms. If we can, I would think that the urban side of that demand could probably be even higher than the rural side, simply because we've had lesser. It's coming out from probably a cyclically depressed situation of demand over the last couple of years. But now with urban incomes set to grow once again, we would probably think that those which are a little more oriented towards the urban side of the market would probably grow faster. In some of them, product categories are actually reaching certain inflection points, again driven by income levels and rising prosperity. So those are categories also which probably could see almost J-curve hockey stick kind of effects in terms of volume growth, and that is what, to my mind, I think is driving this kind of frenzy in many of the names. It's not as much about piling onto defensive names. It is basically about they also being as much a beneficiary of any kind of economic recovery as probably would be, let's say, some of the more interest sensitive names or infrastructure related plays. So that's what the market is driving at. There is more clarity of growth out there and better return ratios and cash flows out of the businesses, many of those businesses. So I think to some degree, many of these moves are probably justified from a slightly medium to long term basis.
Sure. Mitesh, comment on the Bank Nifty futures and how you're approaching a UCO Bank hammered in trades today.
See, we had a sell call on UCO Bank, clearly a negative news flow. I think it's close to support areas of 90, but the structure is weak, and I'll not be surprised to see if the stock starts facing more supply and goes below 90. I think the stock can decline all the way down to about levels of 85, 84 on the downside. So I would remain negative over here. I think either sell on a pullback to about levels of 93 to about 92.5, keep a stop beyond 95, or sell below 90.
As promised, we're finding out some of the stocks that the dealing rooms are advising, in addition to getting out some top picks from our experts. Poonam standing by from our research desk to flag off first what the dealing rooms are betting on. Poonam.
Firstly, of course, it is the IndusInd Bank, wherein the RBI, consensus sources do suggest that the RBI is looking to relax the 65 years age cap for private banks. And do note that in terms of IndusInd Bank, Mr. Romesh Sopti, the MD and CEO, his tenure ends during Jan of 2015, and he's supposed to touch the age of 65 years in March 2015. And if RBI does relax this cap, then it would be definitely a positive for IndusInd Bank. Also, analysts do remain positive on IndusInd Bank, with Axis Capital having a target price of 667, and also that IndusInd Bank has relatively underperformed the Bank Nifty, gaining just 46% versus its other private banking peers. The second stock is Bharat Electronics, wherein it is the top gainer on the CNX mid-cap index, and it has the volumes have grown nearly at 1 month high. Currently the FII holds just 2.2% in this stock as of June of 2014, and DIPP has stated that the portfolio investment cap up to 24% under the automatic route is now allowed, and this is definitely going to be a huge positive for Bharat Electronics in this space, as we would see more of FII ownership coming into this space, and the stock already closed an upper circuit today.
082 S post closing 17.88%. Poonam Sani, many thanks for that. I'm not surprised this features out there. Mitesh, really good calling. I remember that at around 240 or 245, when the stock was at 2062, you recommended a further buy on BEL. That is one of the recommendations that we have. Fill us in on why do you like this, and what are the other stocks that you're recommending?
Yes, I think, very clearly, if you look at the price pattern, excellent technical trade setup happening over here. It did some strong base building in the range of about 1730 to about 1870, and then broke out today. The breakout happened with gap with a lot of indicators giving positive crossover. I think this should signal a restart of an uptrend, and I think the earlier highs of 2250, 2300 should be revisited. Now that's also a very important level on the monthly charts, but I think the structure suggests that we are in possibly for a breakout beyond those levels. So I think once these levels of 2300 are being captured, I would look at the rally extending to about levels of 2750, 2800. So it remains a buy as well. You might now want to accumulate slowly given the fact that it's moved up 20% in a single day. But I think today's low of 1830, 1850 should not be broken, and I think any declines of 100 rupees should be used to add on to long positions. The trading calls which I have for the day are a buy on ICICI Bank with a stop at 565 for targets of 610, and a buy on Hexaware around 163, 164. Keep a stop below 159.5 and look for targets of 175.
Okay, that's the technical approach. Tahir, the government certainly seems to be delivering on its promise. First it was FDI in defense, and now 100% FDI, we understand, has been approved in dedicated freight line, loco making, as well as rail infra construction. This is certainly going to bode well. A quick comment on the same?
Yeah, I think, I mean, these are sectors which are clearly require a lot of financial support and have lagged behind in terms of investment. So I think this is clearly welcome. It's also reaffirmation of the fact that the government is committed to delivering on some of those which at least they are in a position to clear immediately without having to go to the Rajya Sabha or the Parliament as often. So I think wherever they can activate the thing at their free will, I think those are the things which will get across very soon, and that's also the reason why I would think I'm reasonably hopeful, or even the oil and gas reforms, because that's something which is something which is at their executive level to be able to execute immediately. So I think it's a good indication on the continuity of reforms.